Hey folks, it's Mike Parker, Parker Real Estate Group, Huff Realty, and I've got my superstar mortgage person here. You want to introduce yourself, my lady?
Sure. Thanks for having me. I'm Colleen Parsons from Thrive Mortgage right here in Erlanger.
We've been working together, what, 22, 23 years?
Somewhere around
Something like
there.
that. We've helped a lot of people get their mortgages and stuff. There's a big controversy going on about the mortgage world, and I'm going to let her explain it.
Well, thanks, Mike. I appreciate that. I'm going to try to put this in the easiest terms I can for everybody. We've all heard that perfect borrowers, our 740 or higher credit scores, 20% down buyers, are going to get higher rates because they have good credit and a nice down payment, versus someone that may have a less than perfect credit score, say in the 640s. This is not true.
Not true?
It's not true at all.
You sure?
I'm positive.
Okay, all right.
So what has happened is Fannie Mae and Freddie Mac have come out with some additional loan level price adjustments that have made a little bit of difference in what we're going to see in the difference in the rates between borrowers with, say, a 740 credit score and a 640 credit score. Used to be about a 2% difference in adjustments from our between those two types of borrowers.
When she says 2%, now that's not in rate. That's
Right.
that's in the spread.
Correct. So the rate may have been like a 1% difference. Now we're going to see about a 0.5% to 1% difference in that spread that could make anywhere from a quarter to only a 0.5% difference in that interest rate, depending on where those credit scores go.
Let me put you in my terms, my layman terms, old hillbilly terms, okay? So a 740 credit score, and correct me if I'm wrong here, 740 credit score, these were not rates today, these was just, we're making up some numbers here. If a 6.5 is at 740 credit scores at 6.5, in the old days, that would probably be a 7 to a 7.25 on a 580, 620 score, something like that.
Yes.
Usually about 3/4 of a point difference there, right there. So it's going to be
Probably
closer.
more even.
Yeah, possible more. Yeah, it could very well be, especially on a 580. But it's going to be closer now, is what
Correct.
you're saying. So
Right.
the 740 plus score is not going up. It's just the 620 credit score is going to go be a little bit closer to the
Correct.
740.
That's correct.
Things
Yes.
like that.
So whether you have 5%, if you compare 5% to 5% or 20% to 20%, those spreads have just gotten a little closer on the adjustments. It's not so much the interest rate when we talk about this.
Right.
So there's always been adjustments that have been made to the interest rates. They've just made a few changes to that.
And just FYI, why I got you here, let's cover down payment.
Okay.
You know, there's an old myth you got to have 20% down payment. That's definitely not true, right?
No, correct.
We could do FHA at 3.5%.
Mm-hmm.
And if you conventional 5% down, with a 740 can do 3%.
Well, if you're a first-time home buyer, there's a 3% down program, and if you meet certain income limits,
Okay.
you can also get a 3% program on conventional. But yes, you need to have a little bit higher credit score. I'd say 680 or higher on
Okay.
average to qualify for that.
So let's talk about the people. There's rural housing, there's KHC. Kind of explain those real quick.
Sure. KHC is Kentucky Housing Corporation, and that is a state bond program that we participate in, and we are able to assist with down payment towards $10,000 towards down payment or closing costs.
Now, to do that, the income comes into play on that one, doesn't it?
Correct. There are income limits that come into play. They're pretty reasonable for our area.
Yeah, KHC is a great program. If you're thinking about buying your first house, KHC is a great program. Now let's talk about the rural housing.
Sure. USDA. So that's for more rural areas. I don't want to say this exactly, but if you think of outside our 275 loop, most of those areas, not all, but most of those areas would qualify for the more rural areas and USDA.
Like in Boone County, if you're on the east side of 237 or Camp Ernest, it's a no. If you're on the other west side, it's a yes.
Correct. Correct.
Yeah, and then Independence, it kind of depends where the line is.
Right. Right. I mean, we have a map that we go to.
Right.
We can actually, if you're interested in a property that we may think is in one of the eligible areas, we can actually type the specific address in, and it tells us if it's eligible or not.
So what's your contact if they want to do that? How do they get a hold of you?
Sure. Give me a call at 859-992-2246, or shoot me an email at colleen.parsons@thrivemortgage.com.
Ladies and folks, she does a great job. Like I said, we've done a lot of business together, and she's a straight shooter just like us. You know, we call it like it is. And what's a good thing about what Colleen does, if you got credit problems or something, she'll tell you how to solve those to get you set up where you can get a house. And that's very, very important. So appreciate you coming out.
Thank you for having me.
All right, take care.